Hello and welcome to an all-new episode of the Bitcoin News Show right here on the CryptoCast Network. Thank you, ladies and gentlemen, so much for joining us yet again on another beautiful Sunday to talk Bitcoin. We got a lot of stuff to go over this week, and I'm really proud to present you guys these panelists this week. But before we do that, we are screen sharing the CryptoCast.network website where you guys can find all of our links, YouTube, Twitter, Instagram, RSS, iTunes, and all that good stuff. We do have some shirts on there if you guys want to check that out. And if you want to support content like this and this channel, you can definitely check out our QR code to donate there on the CryptoCast.network website, as this is a community-supported YouTube channel. So we very much support all your guys' donations and feedback. Thank you so much for that. So let's, with that aside, guys, let's go ahead and get into our quick bit section and go over the week's highlights before we get into the main three topics. Got a bunch of stuff to go over here, so let's bring over the notes. And essentially, let's start right here. So we got the world, guys, the whole world celebrated the Bitcoin Pizza Day. To celebrate the first two pizzas sold for 10,000 Bitcoins. That was pretty awesome. The very first, basically the very first Bitcoin transaction. That was really great to see. Everybody was posting pictures all across Twitter. Tons and tons of pizzas. I myself indulged in a pizza as well. So that was really, really great to see everybody, just the whole kind of community coming together and just celebrating something fun like that, because it tends to get pretty drama filled over here in the financial world. Then we got LocalBitcoins. Looks like they are now denying service to Iranian users due to the sanctions and stuff that's going on. But guys, HodlHodl, the exchange over there in Latvia, I believe, has welcomed them. They have a blog post out there letting you guys know that if you guys are in Iran and you want to trade Bitcoin, HodlHodl has you covered. So make sure you guys check that out. That's just the power, guys, of Bitcoin. You know, you can't stop it with a sanction. You can't stop it with a pen, anything like that. It will continue to go because somebody, guys, always takes the other side of the bet. So that's really, really cool to see. Congratulations over there to HodlHodl. Those guys have just been killing it. You know, I mean, that's a centralized exchange, but it's a non-custodial centralized exchange. So it's really, really great. They have great support. Make sure you guys check that out. And then speaking of exchanges, we got Bisq, guys. Bisq's lead developer makes, he actually has left the project to make the way for the DAO to take over. So this is really cool. This was always planned for Bisq, the creator of Bisq, which is a decentralized, the actually only real decentralized exchange on the planet, decentralized exchange for Bitcoin and other crypto. BISQ is how you spell that. And the lead developer has stepped away, just like Satoshi did for the original project, to make sure that it does remain truly decentralized. So that's pretty interesting, pretty cool. Make sure you guys check that out. Bisq, B-I-S-K, or sorry, B-I-S-Q. Bisq. Really, really cool project, guys. And then we got Bitcoin outperforming the stock market again by a whopping 10 times so far, guys, in 2019, 10x. Bitcoin continues to outperform the pretty much everything. If you look at it over time, you know, Bitcoin is the best performing asset pretty much on the planet. If you go all the way back through 10 years ago when it was almost worth zero. So make sure to check that out, guys. Really cool to see the world realizing the potential of Bitcoin as it continues to outperform literally everything else on the planet. Then we got Jack Dorsey's Square Cash app, guys, that lets anyone buy Bitcoin, has become the top financial app in the App Store. So that is pretty exciting, big news, just to guys show you how much demand there is for this asset for Bitcoin, to be able to purchase it, to be able to use it. Of course, right now it's mostly used for speculation, but this is absolutely the beginning phases, guys. It's very early days, as I try to tell everybody. But this shows the demand. You know, Bitcoin is going to get is continuing to get into more and more people's pockets, and this, of course, will help protect it in the years to come. So very interesting stuff there. And then we got Roger Ver, guys. Love him or hate him, Roger Ver out there still doing his thing. Apparently has lost a $10,000 bet to Mr. Tone Vase. And the bet was for a $5 transaction with a 1 Satoshi per byte, 1 cent fee to clear within 24 hours, and Tone succeeded. Roger lost. That transaction was confirmed within 10 hours of the actual bet. And obviously, absolutely, Tone Vase won that bet. Roger is contesting it because he is saying that, of course, the transaction was included prematurely by a miner. And even if it was the case, which it looks to be, doesn't matter. That was not specified in the rules of the bet. The bet, of course, was just for the transaction to get cleared, which it did. But this is how Roger works. He likes to dish stuff out, but can never, of course, take the heat in the kitchen. Never can take the fire. So once again, Roger looks like he's kind of cowering away there from yet another lost bet. And of course, we know that BCH still has basically almost zero activity on that chain. Pretty crazy stuff. And of course, they just got 51% attacked this last week. So, you know, Doing good on the BCH chain, guys. Keep it going, Roger. Keep it real, my friend. And then we got Bull Bitcoin, guys. This is pretty awesome. Bull Bitcoin, you know, Francis Pouliot's company out there, Mr. Bull Bitcoin. This is an awesome company, guys. They have become the first Bitcoin exchange to integrate CoinJoin via Wasabi Wallet and its Project Cipher node. This is really awesome, guys. This is literally combining CoinJoin into the technology stack of this company, of this exchange. So that means that what he says is that all the user UTXO deposits directly and instantly registered in CoinJoin. Purchased Bitcoins are sent after mixing. So that means that everything, guys, gets mixed, you know, in and out. So for the end users' privacy gets protected. And in my opinion, I think every single Bitcoin company on the planet should be doing this, either whether it's using Wasabi Wallet or another method, you know, pay to endpoint, some kind of CoinJoin built in by default on the exchange layer or on the, you know, the transaction layer, not on the base protocol layer, guys, of course, but on, you know, somewhere in the transaction layer. So that could be at the exchange level or the business level. That absolutely needs to happen. And I believe that will happen over the next few years as more and more demand comes from consumers, because, guys, it's really not that complicated to actually set up if you're a Bitcoin company already. So looking forward to seeing more and more of that. And finally, Fincen, guys, releases new guidance on virtual currencies. In my opinion, the biggest takeaways are essentially this is good for non-custodial wallets. And of course, looks like BTMs, Bitcoin ATM machines, are for sure considered now money transmitters. We already knew that was going to come along, you know, as Bitcoin ATM, so that was nothing new. And of course, Lightning Network, they basically said they're not touching Lightning Network, guys. With a 10-foot pole, like there's no way they can begin to regulate. You might as well try to regulate torrents, and we see how well that went. So really cool. All right, guys, so that was your quick bit section. Let's go ahead and introduce the panelists today. We have some awesome panelists. I'm really excited to bring you guys these people. We got first Mr. Patrick Dugan, CEO of Trade Layer over there. Patrick, really nice to have you on again, man. You always impress, man. You are deep into the financial economics of this space, doing exchanges and decentralized swaps. So we thank you so much, Patrick, for coming on.
Yeah, it's my pleasure. Thanks for having me back.
Yeah, man. I always like to pick your brain. We got some stuff for you. We always like to see where you're at with the industry. Really appreciate the comments.
Yeah, I could say a thing or two about the Fincen as well after the intros, if you want.
Oh, absolutely, man. I want to hear it. I want to hear it, man. I want to hear it. So then we got for the first time, guys, on the show. We've had Patrick on the show in the past. This is for the first time we're having Mr. Alex from the Bitcoin Developer Network over there at bitcoindev.network. Alex, how are you doing today?
Yeah, doing pretty well. Hope the same on that side. Obviously, thanks for inviting me on the show, man. Hoping to have some interesting discussions.
Absolutely, man. Yeah, we really appreciate your website over there, guys. You guys all need to check it out, bitcoindev.network. There are some amazing, excellent articles on there for getting started with developing with Bitcoin. And you guys just keep killing. You just keep, creating more articles. And I'm really impressed, and I'm really thankful that you guys are putting out this educational material, because we have, lots of educational material on the surface level of Bitcoin, right? But you guys put out technical stuff and for the technical people. And I really, really appreciate it, because that is difficult and a thankless job, man. So really great work over there, Alex. Looking forward to more stuff over there, bitcoindev.network. All right, guys, let's go ahead and get into the first topic of the day, arguably the most important topic of the week, possibly. Let's make my screen a little bit smaller. Maybe my laptop will chop a little less. We got this first topic, guys, Bitcoin being accepted by major retailers once again. Of course, this was a big phase back in 2013, 2014. All the retailers started accepting Bitcoin. So this time around, we got AT&T, Regal Cinemas, GameStop, Baskin-Robbins, Crate & Barrel, Nordstrom, and Whole Foods now accepting Bitcoin via BitPay and Flexa. So this is a little bit interesting. I want to get the panel's views on this, but just a little bit more information here. According to the various articles we got here, this is still very experimental. Most retailers are actually still refusing to even comment on this. Some of those mentioned retailers, and actually some have already pulled out. Like Starbucks, they've actually pulled out of the deal. So, in Flex's case, they kind of just reworked the actual and reconfigured their actual retail scanners to recognize QR codes from this app, from the Flex's Spend app. So it's not too much, technology change there, but it is interesting still. And even the journalist who actually wrote this original article on Forbes claims to have successfully used the app at various local retailers that was mentioned. So let's start with you, Patrick. Let me ask you. I mean, is this time different, right? That's what some people want to know. Some people argue that we need retail for mass adoption. We need it. Of course, as what we've seen.
I remember.
Well, real quick, Patrick, because what we've seen, right, is just that the retailers, they just sell the Bitcoin for dollars, right? And it just ends up putting downward pressure on the price. So what are your thoughts on this? Is this time different, Patrick?
I think, so what you really want when you think about merchant adoption, I mean, it's nice to have more ways to sell your Bitcoin. It gives Bitcoin more base utility. I mean, as long as you're in a country where there's a reasonable regulatory climate, there's going to be liquid exchanges with possibly lower friction, unless the processor is kind of loss leading its services, first million free kind of a thing like Coinbase did years ago. So you use the VC money to subsidize whatever the cost of trading is. And that's what BitPay et al. End up doing, right? Is they just put the order out, or maybe they take liquidity on a hedge in order to lock the risk out very quickly, for taker fee and like a half basis point of spread. So it's like 8 basis points in cost. So that's sort of their cost of goods sold for this service. And, it's cool because like, I think Bitcoin is meant to be bought and sold. So you get this like dynamic ecosystem. So, merchant adoption doesn't really excite me as far as like application goes. But like, I remember like, this reminds me a lot of that time when Microsoft announced that they were going to accept Bitcoin. And I remember I saw it in Skype, and then, it was one of the groups I was in back in 2014. And then I like snap longed, and the market popped like 8% in about an hour. And then that was like a melted candle, and then it fell over, and then we were making new lows within a week. So we're in a different environment now. So now we're, in a bear market, like good news is still not that interesting, doesn't move the market. And then bad news will spook the market, and then bull market get vice versa. So now the trend lines are underneath of us again. So we're all for these bullish announcements, and they can help goose the market. And, I think it's interesting. The AT&T thing is, it's cool that they're shipping phones with integrated wallets. I think that's a much bigger deal, because like, it's not so much about new ways to sell Bitcoin to people or new ways to for people to dump it. It's about getting a bigger number of installed user base using the protocol, right? So if, what we want to imagine is like in 10 years, like the millennials are the old people who are like, oh, you millennials are, doing it your way, right? And then there's Gen Z is like, we're young people, we're just trying to make it. And then they're like, maybe it becomes popularized to like, punt on Bitcoin derivatives or to just, maybe it's trading shitcoins. I prefer it would be Bitcoin derivatives. But, like, oh, this is a way to make money, and that becomes popularized. So like in this future where there's like a different set of people who are the young adults who are trying to scrimp and save, and then there's a different set of people who are like the middle-aged people, that could be like their Nintendo experience is they got a new phone and it just like is built in, and then you had a few major corporations like Square facilitating the ease of flow in that. So yeah, I mean, despite my miserly lack of enthusiasm about merchant in general, like I can see how this the installed base thing I am excited about. I think that moves the needle more. And then back then it was like Microsoft was going to do a template in Azure for enterprise, and then they did that for like Factom. They did that for every major project. But yeah, this is much more B2C. So yeah, I'm more this time around, rather than the last cycle where it was a lot of these kind of reaching for straws, press releases to pump price. Yeah, I'm going to say this is a B+.
That's pretty good though. I mean, because it is interesting, this time around, it does feel more like a Bitcoin, not blockchain type of retail adoption thing, where it's not just not everybody claiming for adoption. No, they're claiming for BTC, adoption, which is interesting at the retail level. I think
Jack Dorsey's probably deserves a lot of credit for that. In making it like he like Ashton Kutchered it in a sense.
Pretty much. I mean, building a life brand around it. So let's get Alex thoughts in here. Alex, what do you think about this retail announcement? I mean, to you, does this matter at all? And do you are you excited about maybe again building out the base of users more, or does this really just not even concern you, because really it's not even creating a closed loop economy because they're just all selling the Bitcoin for dollars anyway? What do you think, Alex?
Yes, obviously, I'm having a look at it quite a lot from a technical perspective, but as we know, some of the constituents within the Bitcoin network that we need to be cognizant of that play quite a big role in the like reaching consensus about where the network goes is obviously your wallet providers, your developers, your miners, and I think merchants within that ecosystem play quite a vital role in facilitating kind of like these bridges in exchanging your value for typical products and services. Something I can say with regards to this, which I think where we perhaps differentiate a bit, and I can give an external view, is I'm not based in the US. I'm obviously based in South Africa. And something I've noticed with a lot of the applications, even if we have a look at like your Venmos, your Cash apps, a lot of these, and including this Spedden app that has been released, is when I went to their website, they gave me two options. I could either install that application onto my Apple mobile device. There's a notification that they'll make an Android device available. But territory-wise, majority of those applications, if not all of them, are not made available to me outside of the US, which you can understand because these guys need to get the licensing and the regulatory side of it sorted. So to me, it doesn't really have any benefit whatsoever. And I've seen these initiatives being very synonymous with, I don't know if you guys recall, like DVD zone restrictions on media, where certain areas, you even had it like with your PlayStation consoles, your DVD players, it's under the digital rights management side, is that certain of these discs would only operate in certain jurisdictions. And I'm kind of finding like what you're seeing now with Flexa and Spedden, they're applying those same restrictions to your value because, as we know, Bitcoin is completely borderless neutral, and now you have these providers that are filling that bridge, but they're crippling the technology by only allowing you to spend it within that jurisdiction. So I don't really see it as beneficial as, say, something like BTC Pay Server, where you're actually implementing your own payment gateways. Another criticism I have with Flexa is going onto their site, they also have a ERC20 token that they've mentioned to be kind of like a collateralized token called FlexaCoin. And I'm kind of trying to position what the benefit of that is to the ecosystem, other than perhaps just providing friction or raising funds or whatever the case might be. And then another criticism I have, being a software engineer for 20 years professionally, I grow quite accustomed to the free and open software movement, where I'm of the opinion that at no point in time should software control the user. The user should always be in control of the software. And therefore, I'm a big proponent of open source and more so free software movement kind of like applications. And Flexa, in this case, their Spedden app has got SDKs you can deal with, but they've completely closed sourced the actual system. And to me, that is, you end up with kind of like this vendor lock-in situation where, let's say, Whole Foods who are adopting this are gaining the benefits of SLAs, gaining the benefits of integration, but at the cost of flexibility in being able to move that infrastructure elsewhere in the event that something happens, let's say, to Flexa. So although I believe merchant adoption is important, I'm not too keen on kind of like these closed source, closed-knitted crowds that implement it in a way that restricts that without giving you the flexibility to update and maintain it yourself. So it's kind of like a bit of a, that's a no from me, man. I'm not that excited about it.
Do you mind though if I get your sort of philosophical take? Like, okay, let's say that's bad. I generally agree in principle because there's less vectors of interactivity and percolation and use of the tech, and there's less ways for the tech to get better. And you lack that community auditability of like, yeah, I've seen the code. Have you seen the code? It's cool. Check it out. It's legit. You know, that kind of like part of what made Bitcoin great. But like, what business model would a company like that utilize if they aren't keeping closed source code? Because they're operating at the second layer, so they don't need that underlying auditability of us using Bitcoin, right? So they can then go, oh, well, we'll just silo this and we'll try to create vendor lock-in, and then we'll monetize upstream later on as we sell out to corporate America, right? Which seems reasonable from a certain perspective. But how else would they make money?
Okay, well, I think those questions were answered in the 90s, particularly when Linux came across as an open alternative to proprietary software vendors like Microsoft. And the question at that stage was, how do you protect your intellectual property in the software realm, if not through closed source and proprietary software principles? So you would trademark it, you would obviously get a couple of patents on it, but an additional way in which Microsoft at the stage would kind of like protect their IP is by only shipping the binary versions of what they developed out to their clients. So they left their clients at the complete mercy of Microsoft to ship updates. And the question was, well, how would Linux actually sustain itself in an ecosystem where it is not protecting itself from the Linux operating system being closed source? And out of that, we started realizing business models like the Red Hat model became viable, because instead of kind of sitting on your laurels and kind of protecting yourself through the closed sourcing of it, you rather started identifying there's more to be made in releasing that in the ecosystem, getting collaborative feedback, and then rather focusing on training, support, any value-added services around the operating system. So not necessarily monetizing the operating system itself. And at the stage, I mean, I was working for a software company who was a Microsoft partner back in the late 90s. And I recall at some stage they were running an IIS server, which is Microsoft's web-based internet server for hosting websites. And we were running about 5 websites on this thing. And one day I just got called up and said, you know, these sites are down. Went into the office, tried to double click like the icon on the desktop. It wouldn't actually invoke the software. I couldn't do the management. I tried to reboot the box, but despite all my efforts, I kind of could only resolve to phoning Microsoft to help me solve the problem. I then ended up kind of like replacing all that infrastructure with Red Hat 6.1 at the time, which is obviously open, replaced it with like Apache-based servers, and received a significant amount of flack from kind of like our international constituents, because at the time, hindsight's 2020, right? That model was being seen as counterintuitive to what the closed source model was trying to achieve. And the question was, do I as a corporation feel comfortable with the SLA agreements I'm going to have with these people to actually serve and make these changes for me? And I think what Red Hat said is, well, we don't need to close source the software to provide that kind of service. We can still provide enterprise-grade software and SLAs which can fulfill these needs, and those you can monetize. You don't necessarily need to do it by closing the software. And I think in the same right, like we're having a look at Flexa, etc., I think it's a bit of a red herring to believe you need to protect your IP through closed sourcing it. You just need to be better at supporting it from integration support, which also then doesn't leave these people in this vendor lock-in situation. I think there are many opportunities over and above trying to me, closed source software to a degree is rent-seeking behavior on crippling your computer. I think you can monetize on services around that. You don't need to do it at the actual software layer.
Yeah, that's a great point. And again, we kind of have figured a lot of this out through the open source movement, as it's been around for decades now. And we see that there is a whole lot of value in these value-added services that companies can still take advantage of. So that was a great question, Patrick. I'm glad you asked that, so we can get this in the discussion, because it is really important, because that stigma still sticks around, that closed source stigma, where people are like, I need to close source all of this, or else somebody's going to copy me and I'm going to be out of business instantly. And it's like, that's kind of,
we're about to talk about a Microsoft open source
and Microsoft
vendor, so that's interesting.
And Microsoft completely, I believe, has started to recognize this, right? And they've made a complete 180 with that ever since that new CEO, right? They've open sourced all sorts of stuff, and I'm quite proud of them, because I am a bit of a .NET fanboy myself, C# developer. I absolutely love the fact now that I can run an actual native .NET code now in Linux, and that is with Core 2, and that is just freaking awesome and powerful. And I think that the ecosystem is responding very much in kind. They're very much loving this open source Microsoft, this open source version of .NET, and so it is keeping them in the game. It really is. It has kept .NET and C# in the game. So that's really great to see. A couple other points are, just from my point of view, personally, I think that there are like you guys say, many other ways to monetize other than this closed source initiative. And really, what I really am looking forward more towards, like you guys, I'm kind of with you guys, where we need more of a closed loop economy, right? So these types of retail adoption is not very, very exciting to people like us who see the long game, I think, who see the end game of Bitcoin and see the potential, the value add that Bitcoin really gives to this world. And it's of course not a PayPal 2.0, right? That's not what gets exciting. That's not why I'm here. That's not why I think you guys are here and why this is exciting. So at the end of the day, retail adoption, guys, look, it's important, of course, but really it's more for future stages. And at this point, it's kind of being used more for hype and a marketing ploy than actual getting new users, because we see this recent, price action. This is not from new people, right? This is just from people in the crypto space that have entered here in the last couple of years, because this space is now that big. Like, it's that big. We can pump our own bags pretty much at this point, guys. Like, so that's essentially what we see now. Of course, just recently when the price goes up, what happens? Well, we see the Google trends start to rise, and we see attention start to rise and things like that. So of course the market cycle ensues. But I think we've all shared the same opinion here on that. So I think we can move on. Really great points, guys. Really appreciate that. I think we can move on to the next topic now. And if you guys again are liking this content, we really appreciate it. If you guys could share out the show, give us a thumbs up. If you are new to the channel, please hit that subscribe button so you guys get notified when we have new shows. And of course, guys, we really appreciate it. If you really want to support this content, please make sure to check out that donation QR code address over there at cryptocast.network. Now, let's move on to the second topic. We're making pretty good time here. Poloniex, guys, is going to officially stop offering trading of 9 assets to U.S. customers. So on Wednesday, May 29th, the markets for these various tokens, ARDR, BCN, DCR, GAME, GAS, LSK, NXT, Omni, and REP, will be disabled for Poloniex customers in the U.S. So let's go with Alex first on this question. Alex, what are your thoughts on this? Do you think that this is a sign of times to come? Is this that enhanced or that additional regulatory burden that we said was going to come to exchanges eventually when people start figuring out that 99% of these tokens are scams? Like, was this inevitable, and are we going to see more of this to come? What are your thoughts, Alex?
Yeah, I obviously think regulation is quite a tricky one, but in the event that the regulatory bodies are there to protect uneducated investors, etc., I see that as a good deal, especially in sense of crowds like Poloniex or any custodial services where they're managing funds on behalf of their users, right? And I think this kind of action where we're seeing, because this is kind of like the flip side of the previous story, right? Now US citizens are actually being excluded from participating in the market with these tokens. But then again, I think if we have a look at the evolution from centralized exchanges to decentralized exchanges, and something which I think supersedes that is the like of cross-chain atomic swaps, I really see the efficiencies of those becoming the alternative, similar to how Bitcoin became the alternative to custodial money. So at this stage, I think it's inevitable for custodians to avoid this kind of regulation. I think to a certain degree, the more pressure that gets put on them, it's going to make it more lucrative and expedite the development of alternatives to these custodial providers. So all in all, I actually see it as not maybe an immediate benefit to the users of those platforms, but in the long term, the kind of development that is happening to overcome that through algorithmic swaps, or let's say more cryptographically independent, provable swaps, is definitely the right direction. It's putting the pressure points on the right side, but it might not necessarily be acknowledged as such for the users of, let's say, Poloniex in this case. But I definitely think it's inevitable. It's like what we saw now with LocalBitcoins as well, that has started excluding Iranian users from actually having accounts. If you're going to host a service by intermediating yourself as the facilitator in there, you're more than likely going to feel this pressure at some stage. And the key we need to get to is to develop systems that disintermediate and remove that entity out of the equation. So I see it as an inevitable part where alternatives for that will be developed, so we won't be running into these problems.
Great comments. Now, I know you're speaking Patrick's language, and I'm quite sure he's over there just itching to answer. So, let me ask you, Patrick, is this really the sign of the times to come? Will we have, Patrick, real decentralized exchanges with real liquidity and real atomic swaps within the next couple of years? What do you think?
I would say that if you're doing an atomic swap, like that often involves UTXOs with a time lock or something like this. So you're already talking about another blockchain that has like a decent amount of security, that it's being valued in the 9 or 10 figures.
Just got to use liquid. That's all we got to use.
Well, okay, we can talk about other things there as well. But you know, like if you're doing atomic swaps with Litecoin, nobody's saying, a lot of people say Litecoin's a scam, and this becomes this fault line in the like how maximalist are you litmus test. Because a lot of the Litecoin dudes, just for the record, Litecoin peeps are super chill, never had a single rude Litecoin person, and they believe in all the same stuff as like pure Bitcoin people, but they're like, this could also maybe work, and it gives us some beta, so they want to have some of that. Anyway, so it's like very close. Okay, so the point is Litecoin is a commodity. I mean, it's close as far as like, you know, Catholics to Episcopalians or something like this, you know what I mean? So anyway, yeah, Litecoin's a commodity, right? There was never an ICO for Litecoin, you know? So even if you don't think Litecoin has any merit, like legally it's pretty probably a commodity, right? And then what makes something a security, like fundamentally in its nature? This was what people were like hand-wringing about in 2017 and in 2018. So I actually saw the scoring system and questionnaire that Poloniex has for these assets. It landed in my inbox. I punted it over to other people because I wasn't, you know, in control of the foundation at that point. I wasn't working for them anymore. So I was like, all right, I'm gonna let you know, these other guys answer it, and they didn't want to answer it. So you know, it's like nobody wants to like buck up and take responsibility, right? But what the questionnaire asked was like a lot of little, you know, where did you do an ICO? Does the thing have a buyback? Is there a fixed supply? All these little details. And then they would kind of, well, yeah, this looks like it might be utility. But, you know, like the SEC gave us really good guidance recently, and decent guidance about a year ago with Hinman. But there's so much easy money in ICOs, and there's so many people who raised it, and they're like addicted to it, you know, because now I've got like $2 or $3 million or $10 million in Bitcoin. How can you like, it's like, it's now this like homunculus is like controlling your brain. So you go to your lawyers and you're like, we'll pay you $1 million retainer, and you get to like help us, you know. So there's like Kitcoin who's trying to do that. They took Hinman's comments as a challenge. Oh, okay, if we can just run this gauntlet from our ICO to this theoretical point in the roadmap with theoretical usage metrics accompanying it, et cetera, then on the facts of circumstances, we'll just jump free and clear at the last minute, you know, and we'll have another Ethereum, right? Because Ethereum was too big for them to just, they would do too much damage to the public if like Monty Python, Holy Grail style, at the end, the police show up as they're going into battle and they round everybody up. You know, if they did that with Ethereum, it was a lot of people, you know, hence the analogy. And they didn't want to hurt people, right? It's the same thing with Ripple, right? So they let Ripple go to a class action, you know? So that's great, man. I can't wait for the Ripple class action to have a judgment against Ripple. They're going to order a rescission for like $1.5 billion in Ripple Inc. Treasury. And, you know, maybe Ripple will sell off to like a fraction of a penny, and then it's like treasury value is like a penny and a half for all the money they took in. And it'll like bounce as they like settle it out. And it'll be like Gox times 5 or 10 or whatever. Okay, great. You know, and then it'll open the floodgates for all these other ICOs. Preston Byrne and all the other wisecracking lawyers on Twitter are going to get together with some hedge fund guys who are going to spitball them, and they're going to like, you know, get stake on like the payouts and these things. And then we'll get like some social apps, you know, like I was thinking of one called Class Act, and it's like Tinder, but for other people who bought shitcoins. And you match and you get into the class, you know, do you want to be, it's like, yeah, there's nothing for you to lose. Most people don't want to get into a class because they think, well, my bag's going to be wrecked if this thing gets sued. And it's like, bro, these guys have like 1,000 Bitcoin or more in treasury, okay? And according to 10B, you know, maybe they made some fraudulent misclaims or whatever. There's a lot of these things. Some of them have easy cases, some of them don't. Anyway, so getting back to Poloniex delistings, all of these coins had ICOs. Because you sold something for money on a promise, that is a securitization. So I can create a cryptocurrency that's fair launched, and let's say it's a commodity and it's like Schopenhauer, like existential underlying reality, whatever. But like, if I say, you know, this thing's a little early, I need you to give me money so I can keep developing it because I'm broke developing it myself, then, you know, that's a securitization. So I better do that under Regulation D for 506B is my preferred one, or under maybe Reg CF, but that's problematic because there's a holding period. So you have to have like a derivative thing like equity in your little open source development company, or some kind of token that is meant to be a security, right? And then you don't necessarily taint these things. So like with Omni, like okay, or like Augur is a great example. Augur, like, was Augur fundamentally a scam? They didn't raise that much money. They were like, you know, only investment you can lose. This is an experiment. We need a thing where you can lose it if you don't vote. So it creates this social pooling effect, and we can have decentralized oracles. Okay, like, okay, Jeremy Garter, you're not a scammer. You know, sure, I'll give you my half a Bitcoin in 2016. I didn't actually participate, but, you know, but the point is that, like, that shit might be a real commodity in its utility, maybe, right? But they had an ICO. So for Poloniex, it's easy to say, okay, forget about it. So I'm hoping the SEC subpoenas all these dudes. I don't have millions of dollars, but I don't think getting any SEC subpoenas, you know, kept my beat clean, stayed off the money cocaine, basically, that is ICO funds. It's like, ICO. So yeah, I want ICOs to die forever, and for like the big money footprint ICO coins to get marginalized. Maybe Ethereum got past the gate. Well, and then we can have fair launch coins, and the market will go, oh, instead of losing money on this basket of 800 shit coins that people just floated on a wing and a prayer, we'll buy Grin, you know. And I know you're, oh, well, Grin's not Bitcoin, you know, but what, like, at least those guys, you know, at least there's something cooking there, you know. Anyway, so, rant over.
Yeah, so let me ask you then, Patrick, like, because you know, we're talking about decentralized exchange. You know, you work on this type of stuff. Like,
yeah.
If it does it really only matter for crypto? I mean, if we do get all of these crypto decentralized exchanges, and we have all of these things, atomic swapping over the Lightning Network and everything like that, you know, what happens to traditional centralized exchanges at that point? Do they become more decentralized to get some of that liquidity? Or how do you see it play? How do you see the centralized versus decentralized exchange like playing out? Because obviously they have to be side by side for a while. But how do you see it playing out over time?
Okay, well, I'll try to make this brief because it's not on the summary list. But
sure.
I thought that there would be these sort of black holes of centralized liquidity, possibly factored out like a side chain. So it's like a neutron star or something. And then you'd have, you know, this ersatz settlements trading around that in a more slow, open, maybe pseudonymous open source.
Sounds like you're describing Liquid Network, but all right.
Well, no, I'm thinking more just like any on-chain order book kind of like, so Omni's original DEX, where you could trade like MadeSafe coin against Tether or whatever, was like you broadcast, you get a mempool timestamp, and you get matched based on those timestamps. But a mempool timestamp is like throwing a dart on a dartboard across the planet. You know, like you don't know when it's going to hit. It's a totally stochastic value because it's the network, right? You got to percolate, ping, 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 till you get enough nodes. And if Jihan Wu is running a bunch of miner nodes, and then he's like, oh, I'm going to not relay this one and spit out my own order, you know, or I'm going to cancel my order and jump out of the way of this order, right? They could totally do that. So your time to get to the mempool can be slow, right? So it sucks. So I figured out, so I was talking about side chains, right? And I see Microsoft adopted this nomenclature. So I love it that everybody's talking about side chains. I love it that everyone's talking about Tendermint since Tendermint launch. But I actually realized that for these layer type transactions where you don't need to shuffle around a UTXO, it can just kind of, you can just design whatever TXs you want and have it, make it so, you know. What's important is that you can signal that you and I, for example, I'm going long, you're hedging your coins and I'm going long, right? So I want to trade off, you know, 10,000 contracts with you. So as long as we've got the margin committed, we can co-sign a transaction from that multi-sig to signal to the protocol, yeah, we did this, right? And then we don't have to broadcast it right away. So that's kind of like the principle of the Lightning Network, right? You can write these checks and you can kite these checks in a contiguous path, right? You don't need the contiguous path in this case. I can trade with you. I can shuffle some collateral over to this guy. I can trade with him. So I see it maybe being pretty fast because you get near instant settle. Well, you get like a soft execution assurance when you sign. There's still a tail game theory aspect. There's a little bit less of that tail game theory in the layer environment. but you know, you want to save money. So it's a trade-off on like how much you trust the guy and like how much money you want to save. But if you're operationally live, so you probably, as a matter of course, want to publish a settlement TX and get up to date on the actual blockchain before you go offline. If you're like a retail trader, right? And if you're a dealer, then you can be shuffling around a lot like this. So I think it's going to be things like backed, though. I mean, like even then, the throughputs on backs, like data centers in New Jersey or what have you, like the way that they churn shares from Wall Street, you know, that's still going to be a thing. There's going to be server farms in Hong Kong and Singapore and Shanghai.
So it sounds like to me like I think we have similar views here, Patrick. Where I think that we think that while people are building these huge centralized solutions on top of Bitcoin on Wall Street and Chicago, things like that, there still will be like this whole decentralized sort of ecosystem that's going to continue growing and continue evolving until they can at least get pretty close to matching, you know, liquidity in these centralized systems. I think that's what it sounds like you're saying. Like,
I like to think of it as like a spiral galaxy.
Yeah,
it's kind of a nice image, right? So you've got your hot gaseous core, and then you've got these cool, you know, but there's still energy in them. But there's new blue energy in the arms, because that's where the capital is preferring to be ultimately. But the heat of the center, and it's shooting out radiation, which forms other stars. You know, that's important.
Bitcoin is a black hole, people.
Inflow.
Bitcoin is a black hole. But no, real quick, Patrick, we got to get Alex's thoughts in here, man.
Yes.
Alex, so we speaking of Bitcoin as a black hole, we of course are experiencing new yearly highs right now. I think Bitcoin broke 8,400 just while we're talking here. So let me ask you, Alex, I would like to get your thoughts on Patrick's discussion so far, and basically your thoughts on sort of how maybe decentralized exchanges will evolve to hopefully at some point sort of alleviate these stupid what do you call it, border restricted tokens, right?
Yeah, I think look, apart from the Bitcoin Developer Network, I'm also a co-founder of another project that deals with cross-chain atomic swaps. And something that we found in particular is we're actually not big fans of decentralized exchanges due to the way in which you have to look at decentralization and disintermediation. All right. Now, if we have a look at conventional exchanges, take Ether Delta as a very good example. Ether Delta, as a deployed smart contract on the Ethereum network, is still an intermediated exchange, and the benefit or direct beneficiary of the person who issued the contract, they benefit over the consensus rules of the network, not necessarily the users of those contracts. So decentralized exchanges, the way I see them, because within the smart contracts, you can have ownership, you can write in blacklists, whitelists, you can pause them, these kinds of things, depending on whether or not the source is available for you to audit. Essentially, unless you were the individual that deployed that contract, in most instances, you are not the direct beneficiary of the consensus rules on that network. And this is where I think things like cross-chain atomic swaps actually supersede decentralized exchanges. Because in this case, the two participants on the network actually own the contracts that get deployed to facilitate that transaction. If you're using kind of like a custodial contract to do that, then you are at the mercy of the rules governed by what has been written. So I'm actually more in favor of, I was actually speaking to my team and kind of like saying, you know, if we could get Bitcoin to Bitcoin cross-chain atomic swaps kind of like waxed with a low barrier to entry, although that does not sound cool from a usability perspective, like technologically, it's quite a big feat. And we've seen the utility in that come in with things like submarine swaps, etc. But the important part is that at any point in time, anything you develop should not incentivize people to do bad things or put them in a position where they can actually exploit power. And in this case, you should rather try and develop solutions that facilitate at face value the swap functionality without the counterparty risk. And in that case, where like the swap side, the users, like it's in addition to your primitive transactions. Today, I can send Bitcoin to somebody, while a swap should be a transaction type. It shouldn't be something that is facilitated or churned through a centralized or decentralized intermediary. Because to me, the decentralized exchanges are intermediaries executed on a decentralized platform. it still belongs to an entity. But you, as owners of your private key, you need the functionality to kind of like extend swap as a primitive function of the network. Yeah, I definitely think it needs to move that way as opposed to
Can I jump in and
kind of
qualify that?
jump.
So I think you're thinking of like Ethereum-based DEXs where there's like a contract address that somebody centrally controls the keys to, and you make a transaction pledging capital to be under that address's control, and then you can get in and give it commands, and there's like some smart contract. You know, I didn't really get into Solidity development, but I get the gist of it. That's a little bit different though, in that sense of centralization than what I'm describing. What I'm describing is just an alternative Bitcoin client that parses op-return codes and has this parallel state that it infers from those. So it's just as good as any other. It's almost like a soft fork, if you will, of Bitcoin. So it's as decentralized as the Bitcoin node ecosystem is.
Yeah, just a quick comment from Alex on that, and then we'll move on. Go ahead, Alex.
Yeah, definitely. Well, as long as the users who are deploying that infrastructure, soft fork, whatever the case, if you're deploying it in a way that deprives a user from using that system from the core benefits of the consensus rules, I'd say you're more than likely going to have somebody hot on your heels who would obviously try and provide something that does not revoke that access. And as long as you're selling it in a way where you're making the users aware of the fact that you're distancing them from those rules, that's fair game. But having alternatives to those is obviously quite important.
Yep.
Yeah, I think there's room for all of them. Things that involve more operational risk, which is what the game theory of these multi-sig watchtower type scenarios entails, is probably going to stay more on the wholesale finance side of things, where you may have some kind of reputational relationship with your counterparties, or you've got the tech staff to handle it. And I think that the average person's probably going to want to use things that are a little bit more automated, and it's whatever. There's different ways to slice it, basically.
So I think our summary, for this topic is that, we're going to be stuck with, of course, these centralized exchanges for a while to come. But, there are people working out there on more decentralized versions and even non-custodial versions of this stuff. And I think you guys both would like us to move more in that direction, in the non-custodial, in the more decentralized versions. And I think that's exactly what the market wants, as well as it continues to value Bitcoin more and more. So great points, guys. Really, really appreciate that. I think we can go on to the final topic today, which is a little bit more on my side than the economic side, a little bit more on the technical, on the technical side. So I'm excited to get into this. Let's go with Patrick first on this one. So first, let me describe the topic, guys. So Bitcoin essentially, in my opinion, has become more and more integrated with software and hardware these days. And we see some big announcements here, like being integrated into Microsoft's ID platform, their new ID platform, and into companies like GoTenna and Blockstream, so that they can, for example, not have to have terrestrial internet, right? So we have, for example, the Blockstream GoTenna integration, which allows users to share Bitcoin transactions from a full node via a local mesh network, enabling a decentralized solution for communities to transact regardless of network disruptions. And some of the benefits include, of course, like I said, private transactions and less of a reliance on this terrestrial internet. So we have that going on, in the hardware, and then the software. We have, for example, Microsoft integrating this. Microsoft and others have really been sort of working on an identity type solution for a long time. It's a bit of a holy grail. And so I think that with Bitcoin now, I've always thought that with Bitcoin we can produce something like this because of these addresses. We have literally unlimited amounts of addresses. We should be able to produce an identity almost just around an address, or at least a pointer, to an address. So I think that Microsoft working on this stuff, and GoTenna integrating this stuff, I think this is the beginning signs of the next phase of Bitcoin being integrated into the software, into the hardware. So by that I mean like integrated into your television, integrated into your Windows operating system, into your whatever operating system you have. Just like we integrated TCP/IP, the stack, into the operating system, we're going to eventually integrate Bitcoin. So Patrick, let me ask you then, is this the sign? Like, are we moving into this next phase of Bitcoin being integrated into our traditional software and hardware infrastructure in the form of the satellites and of course now with big software companies like Microsoft?
Well, it's easy to imagine like an Internet of Things situation where the native currency of the internet is used to pay for automated services between automated entities, a sort of robot economy powered by Bitcoin. by easy to imagine, I mean, you know, you can imagine.
Machine to machine transactions, I think, is the lingo on that.
Yeah, but and you know, you could extrapolate that further into the sci-fi of the near future, like mid-century. Where are the AIs going to be living? Are they going to be on Earth? Are they going to be in Amazon data centers? Or are they going to be in CubeSats that are in high Earth orbit? So I remember I was speculating about this back in 2015. Like at some point there might be AIs using virtual currency and harvesting energy, and there's so much space geometrically as you go out, you know, into further shells around the Earth, right? There's a lot more space. So you know that might be a lot easier for the futuristic aspects of this century to unfurl in that space than say on Mars or someplace more distant. It's the logical backyard. And then taking it more to like the next 10 years, Internet of Things. I think what's more interesting, because you can go to a lot of these Microsoft conferences or whatever, and people have been talking to, it's like buzzwordy. What gets my goat a little more is allowing people, so an internet of people who have these devices, and the MTM transaction is just facilitating the underlying economics, making it somehow cash flow positive to be lending resources to these networks, right? Which I think is going to happen. Lightning Network would be a fine way to achieve that, for example. And also in my thing, you run a node and you can signal you're running a node and you get paid this Metacoin. That's how, you know, so I'm trying to, because you don't really have that at the native level in Bitcoin. Like running a node is a little bit of a thankless contribution. And I don't, you know, maybe we could do better. So yeah, I love Gotena and Orchid and some of these other ones because it allows us to liberate ourselves from the dependence on the centralized hardware, military, industrial, you know, matrix, basically, right? So it's like if we don't do that, then all this other stuff is really just self-congratulatory, and we're gonna just pay our taxes, and whatever is gonna happen politically is gonna happen. But if we actually have like hundreds of millions of people using their devices and creating a decentralized internet, it changes the political power dynamic for the world in a more profoundly egalitarian way than anything from the French Revolution. So go with that.
Yeah, very interesting. Yeah, it's interesting you mentioned, you know, the benefits of running a node and how that really isn't you know, financially beneficial immediately. Like the benefits aren't immediately understood. But I think that, you know, Satoshi did kind of, or at least the ecosystem afterwards definitely understood that in order, the importance of running your full node, of course, is kind of self-explanatory, where it's self-beneficial, where it's you get to verify, make sure that all the transactions are valid. So it's kind of like you don't really need to have a, you know, a payment for that because the assumption is that the network is going to do it itself because of its own greed, right? But like you say, there of course is the myriad of options that are being explored in that, and including the one that you brought up there. So let's ask Alex his thoughts on this. So we have, Alex, we have, you know, the Microsoft announcement, we have the Gotena announcement. What are your thoughts on this? Is this Bitcoin moving more and more closer into this integrating itself into our daily infrastructure, like, you know, software and hardware?
Yeah, this obviously opens up a couple of can of worms. I think decentralized identity is actually a waste of time. I think we solved the problem of requiring identity with the first release of Bitcoin, because I can use it without an identifier. To a certain level, I think identity is a form of oppression imposed by government. And it's kind of like an IOU, or a certificate of ownership, issued to you as the government owning you within the borders of your country. So to a certain level of degree, I don't really see any benefit in further developing or enhancing a utility like that if Bitcoin has proven that we can actually develop systems that don't require identity. To a certain level of degree, also back to the first point, like if you have a look at Microsoft prior to its embracing of open source and free and open kind of like software development, I mean, they had this whole antitrust campaign that they issued in the early 2000s, and they were obviously lambasting it under the Ballmer era. So I'm always very skeptical of any kind of development that they do, even till today. Something that they have mentioned, though, is that the ION system is a blockchain agnostic ID system. So it's more trying to specify the standards through which this will be done. One of those is the decentralized identifier standard that's actually going through the W3C. I see a lot of merit in those standards for, let's say, non-human participants in the system, for identifying them in some route. But today, I mean, you can pretty much be identified within the Bitcoin network by pure merit of participating with your private key. There's nothing more to it that you need, and there's no more in addition to that that you might need, unless you need to be compatible with the existing world to a certain degree. So I'm not too excited about that development, apart from them obviously giving Bitcoin a bit of a punt in the news. On the terrestrial network side of things, there have been two problems in addition to self-sovereign money that has concerned me for quite a while. One of them is private networks over which our data flows. And the other one is the kind of domain name system, or DNS, that allows us to address machines within the network via name. I think those two in particularly need to have public alternatives, like we saw what happened in Egypt. I think it was 2011, 2012, where the government completely locked down the country, cut off all internet access. But the innovation that spurred out of that is public mesh-based networks, where individuals were actually writing systems for mobile devices to kind of hop between each other. And I see the GoTenor side of it linked up with Blockstream being a good way of kind of getting us from orbit to ground public terrestrial networks. One of my concerns with GoTenor in particular, like with the Flexa guys, is that there's architecture. I'm not too sure if the hardware architecture is open, but definitely I couldn't find whether or not the firmware they load on these devices was open. And I'm usually more prone to being acceptable to vendors who would open that, because you do become, you are at the mercy of these vendors if it starts getting a certain network effect of adoption. And what risks do we run in being dependable or depending on these vendors going down the route? Something else, I need to kind of check the South African regulatory side, but over here, to do any kind of broadcast of data over a public road requires a license. I can actually not even share my Wi-Fi with anyone across the road from me. I need to apply for a licensure locally to do that. I believe a couple of years ago, even Namibia, which is kind of towards the northwestern side bordering to South Africa, you had the government clamping down on individuals who would kind of track around, build their own public networks to facilitate voice and data communication, and would be in direct violation of that government's policies around communication, because they kind of have incumbents, have got big shares in kind of the energy providers, telecom providers. And I definitely think having some form of alternative terrestrial network is quite tricky in some jurisdictions. But it's definitely a move in the right direction. But sticking with proprietary vendors, I'm a bit unsure about that side of things. So.
Yeah, great points. I mean, remember, guys, this is where we decide what kind of ecosystem we want to build out, right? I mean, do we want to repeat the mistakes of the past and just put everything under this closed source and be subject to these, to the whims of these companies, right? Or do we want to build a real thriving ecosystem with where we open source most of the architecture so that the ecosystem itself can protect itself, right? So that's a big win for companies like Microsoft that open source their stuff. For other companies that open source this their material, this allows an ecosystem to be built around it, and not just be built, but thrive, right, and succeed, instead of, for example, like with Microsoft's system, it kind of imploded for the most part. Like they just alternatives just kept getting better and better and better until finally, like, Microsoft was forced essentially to open source their stuff. So do we want to repeat all that again, guys, or do we want to start open sourcing most of this infrastructure? So that's something to think about, and I hope that a lot of companies in the space are thinking about, and hopefully leaning towards more of the free open source software, because again, like we're seeing here, guys, there is just so many benefits to FOSS, to free open source software development, than there are to closed source, that it's just not even a comparison anymore. So that's going to be, I think, a big win. But yeah, just a quick comment on identity. I just really thought that with Bitcoin, and I still try to encourage this with my Twitter account, that we could finally actually remove KYC AML requirements in software itself, because we now have the ability to identify with just a private key. right? Within the Bitcoin ecosystem, you actually shouldn't really ever need anything but a private key to do anything, to actually interact with the ecosystem itself. Well, hold on, Patrick. Before I know we don't live in an ideal world. I know we don't live in that world, Patrick.
Yeah.
But one day, what I want to do is encourage software developers to hopefully allow us to move into that world one day, where they provide, like, for example, some ability to identify without in KYC AML. Now, obviously, in the traditional financial world, that's not going to work. But we can at least start at the application layer development for something maybe outside the financial world, maybe even in the gaming world, right? Or just something that we can begin to baby step our way out of this KYC AML hell that we've all put ourselves voluntarily in, because we see time after time after time everything getting hacked, all of our data being hacked time and time again. Like, how many hacks is it going to take before we start maybe taking this stuff seriously? Comment.
Well, and so I'm concerned about any, you centralize some kind of keystone repository. So to be fair, I haven't looked through the guts of their architecture. I mean, I saw the sidechain model and so on, but you could also think of KYC responsibilities that some people have. So you're a financial institution in New York, right? So you're governed by New York state law. I mean, I don't want to bore you, but that's a lot of money, right? So of course, I talk to my Asian friends, and they're like, "You just think people in America have money? That's why you care about this stuff." But picture the spiral galaxy again, okay? And think about Bitcoin addresses and transactions as nodes and vertices connecting them, okay? So you can have, so if you are on Coinbase, that's like if you deposited your Bitcoin to a custodial sidechain that trades your coins for you, right? And they got your info, so that's a white node, okay? So they got your private key, your private key, but they've also got all the metadata about you, right? And then you make some jumps and you connect that and you taint your other addresses, right? So it's like good Bitcoin custodianship, because it's always men who are doing this, right? Like you gotta keep it real dark. You gotta use wasabi. You gotta wait till Taproot comes out. So then there's gonna be the dark matter, and strictly speaking, the dark matter is not illegal unto itself. I don't mean necessarily in the sense of dark matter in physics, but the outside stuff that's floating around,
the peripheral.
Yeah. So in order to have liquidity, you have to deal with the Bank Secrecy Act. That's just an unfortunate fact of life. So you can create synthetic dollars with derivatives, and then you're regulated by the CFTC, and then you're not under Bank Secrecy Act because you're siloed with them.
Or Fincen, right?
Well, so you would be, Bank Secrecy Act is Fincen.
Oh, yeah. So, but that's what I'm saying. You'd be talking about, you would, if you did the derivative, you wouldn't have to be.
Right. So there's Treasury, they got OFAC, Fincen, and then maybe there's another one. And you got to worry about those guys, because those guys prosecute, man. They don't send you little letters like the SEC, and then you got to negotiate how much you're going to pay them. They're coming for your freedom, That dude who worked for BitPay, who had just been doing it on LocalBitcoins, and he's a young dude. He was 20 or something. So he'd been doing this since he was, I know these dudes. He's 18-year-old or whatever. They're 25-year-old, LocalBitcoin, yeah, bro, take your cash to the bank, 1 sec, And it's they have laws against them facilitating what, it could be me just perfectly innocently wanting to put money in my bank account, but also it's drug dealers and shit, and
exactly, and we know
that's why they pay 20% premiums, man.
For sure. And that's of course the ironic, funny part is, yes, there's of course some dark activity in there, and will be in there, especially if anonymity is allowed. But of course, when we look at and we get all scared, and when we look at the facts, when we look at the actual data points, we see, it's actually the central banks that is participating in the most fraud on the planet. It's actually not
commercial banks like HSBC, and you're doing a lot of the money laundering. Sure.
Exactly. And so it's interesting when we look at that. But I believe that, to bring it back, I just think that as software developers, we literally kind of rule the world in some aspect. We build the tools that power the planet, and so the power of the economies. The power of the planet.
Right. We don't have to be Manhattan Project engineers and then look back 20 years later with a scotch. And,
so I'm hoping. I'm hoping to inspire, this generation of developers to be able to look in that and to look into the facts that with this new network, you really actually don't, need at the software level, at the software stack level, you really don't need any identifiers other than a private key. And so I'm hoping that there will be this whole huge movement that will eventually compete with the KYC AML. But of course, until then, obviously we know they're not going to roll over.
Unfortunately for US person, so even if I go into dollars,
well, the US will be the last people.
Sure, but let's say I'm a US person and I want to go into dollars through a derivative rather than through the banking system. So I don't have to interact with somebody who's regulated by BSA. I can be regulated and interact with someone who's regulated by CFTC. However, they still want you to do your KYC, have the Patriot Act customer ID number. So the KYC
can happen outside the U.S. I mean, we understand that. But I'm hoping that the pressure will pressure, these KYC people at some point. We're talking 3 to 5
KYC at some level, right? And the level. So in when it comes down to brass tacks of like, they're charging you with conspiracy to commit money laundering, and you want to show that you're innocent. You can, that's why you have all these documents, is that the institution, reams of documents about everyone, right? Okay, we're covered. So how can you, the medium scale financial end user Bitcoin, who may be in the US, right? Or maybe not, right? But let's say you're not, but you have de minimis stuff anyway that hassles you, right? You can do peer-to-peer KYC, right? So you could do a video interaction as a mostly automated handshake, hash the metadata from it, put that inside your on-chain transaction before you start trading and so on. And then you've got a trail where it's no, this is what we did, right? So they don't tell you exactly what you have to do. They just will prosecute you if there's a case.
Sure. It'd be interesting
guidance, right? But there's still these incidences of all these sales. And then for OFAC, if you're a US person, you can't sell someone cigarettes who's a part of a sanctioned thing, or you can be criminally prosecuted for that. You don't even have to know. So it's a really heavy law. It puts this burden.
That's why, Patrick, that's why. Dude, Patrick, that's why, the only way, dude, is to build a completely new system. That's what Satoshi realized. We cannot build this new system from within our current systems. As Patrick is very, very, astutely outlining, this is we've already built this ball of mess, this yarn. There is no way we are unraveling that. We have no choice, but to build something on the side. Now, I hope Patrick
is impacted by this, and the lack of fungibility and further impacts liquidity. So it's a significant thing. And we may indeed see that there are two tranches of Bitcoin. There's the white, central swirl, which sees the most turnover, right?
Right.
And then there's the HODL core, where people aren't moving it for a decade or more, and they're fuck y'all, we'll see what happens politically in 10 years. And it's totally legal to put coins on an address and just hold it, right? You don't even incur a tax event until they put out, a wealth tax. So you can be a totally mild-mannered person who just hedges your bets by putting away a little Bitcoin on the side here, and then you got your Bitcoin that's, you want to take a profit on it in 2020 or something, right?
Well, so that's what's beautiful. Well, that's what's beautiful is that, even with all this white activity that's going to be out there, guess what? There's still hodlers of last resort, as Trace likes to say. So we can still have our private keys, and we can still pull our funds out, the underlying, at any time. That's the great thing about Bitcoin.
What's happening right now is an exodus of Bitcoin float from exchanges and sifting back into the HODL core.
Absolutely.
When the float gets tighter, then the institutions come and chase it. Maybe we'll see that. I mean, we just saw it since the show started. We got a little 5-minute candlestick for the first 20 minutes, and then boo, we hit a 6-8% runner.
All right. Let's get Alex's final thoughts in here.
I'm not saying we're responsible. I'm not saying that.
We're not saying that, but we are. But okay, go ahead, Alex. Your final thoughts, man, on this particular topic.
Yeah, man. From a ID perspective, I think, like we say within Bitcoin, right? One of the features there is not about getting your money out of the government. It's about getting the money. It's about getting the government out of your money. ID to me is a social construct that helps. It kind of helps cripple the system. It discriminates. It oppresses. I think coming out with alternatives to that should really be pursued. And I think that is something that we can work towards, but it's obviously going to take some time, and I think there are going to be a couple of casualties along the way. But definitely at this stage, at least if you have your money out of the government system, they can do with your ID whatever it is they want. They cannot freeze your accounts. I kind of speak from some experience on this end, where to a certain level of degree, asset forfeiture, freezing accounts based off of identifying you within the system is one of the flaws. I actually find identity to be an inherited flaw of nationalism to a certain degree. But at this stage, it doesn't matter because you can copy my ID, you can open up fraudulent accounts with it. I'm more than happy to default on that and fight the good fight with these institutions. But touching my well-earned time and energy that I convert to Bitcoin, you will not be able to touch or take away from me while I defend that right.
Absolutely. Great. Well said, man. I tell you, Alex can articulate pretty well. Me and Patrick just go off on freaking tangents, and Alex brings it back, man, back to the center. So, all right, Patrick, final thoughts, man.
Are you a U.S. citizen?
Maybe.
Yeah. Well, I can tell from your accent you probably are a U.S. citizen, right? Or a lack of an accent, because America.
Perhaps at one point I was.
Yeah. Maybe you're a Maltese citizen now. Yeah. So I mean, being a U.S. citizen, I don't get to be as hardcore as all the other guys, like the Quebecois guys. Are really hardcore. Yeah. Final thoughts. Well, I'm launching a testnet soon. I hope you all come out and poke around with it. Love to have you. We will have to take a sort of dialectic path here. So I think, to get more money into Bitcoin, we got to play the game with the establishment. And then what ultimately happens is that the economics will lead the establishment to having a different power dynamic. And then I don't want to say anything else that's going to get me indicted.
That's concise. That's as concise as it gets, folks. That was great. I mean, this is what we were essentially saying. Another word that could probably sum up that whole thing is Trojan horse. Like this is what's happening. People like we're going to line the pockets of these people with Bitcoin, and it will allow Bitcoin to defend itself. So yeah, I love it. I love it, Patrick. So all right, just find where can we find out more about you, Patrick? Let the audience know.
Oh yeah, I'm Duganist on Twitter. At TradeLayer is the official Twitter for TradeLayer, TradeLayer.org. And we'll be posting an update real soon. We're just cooking this thing almost to the point where we can show it to the public, like pretty much fully functional. Not everything in the roadmap, but like the core functions. So it's been like over 20 months of funding this and working with these guys, and I'm really excited to do something cool in Bitcoin. Yeah.
No, man, that's awesome. That's super exciting, especially when things come to fruition like that. Hard work, man. Hard work pays off. And we're looking forward to it. You guys need to make sure to follow Patrick. I have his Twitter account, below. So make sure to check it out. He's also, of course, a pop culture genius. So you will be privy to some pretty hilarious and interesting tweets in addition to just the crypto stuff. So make sure you guys check Patrick out. Thanks again, Patrick. Really appreciate it, man, for coming. Alex, where can we find out more about you, sir?
Yeah, sure, man. So head on over to bitcoindev.network. Hopefully it's targeted towards individuals who'd like to learn more from a technical aspect. It breaks down a lot of these chunks into consumable bits. And off of that, there's also the Bitcoin Dev Network Twitter handle. Definitely make sure to follow us there, man.
Absolutely, man. Check that guys out. BitcoinDev.network. Make sure you check it out. I love that .network domain. We, of course, use it as well at CryptoCast.network. So thanks, guys, so much for joining us. Really, really appreciate it. Everybody had a great time in the chat. People are just loving it. The price is going crazy, of course. We're hitting new yearly highs. So everybody's exciting. Everybody's super excited. Really appreciate it, guys, everybody for joining us. Thank you guys so much. Thanks to the guests, guys, for putting their time, donating their time into this. We really, really appreciate it. I hope you guys learned something. We really love talking about Bitcoin. We're going to be doing more and more shows, guys, of course, as usual. So make sure you do subscribe to the channel and the CryptoCast.net Twitter account. So until next time, guys, we really appreciate you having here. I hope you learned something. We will be back as always every other Sunday right here on the CryptoCast Network. So until next time, guys, please keep talking Bitcoin, and we'll see you later. Bye-bye.